Hi, welcome to the Market Alert for Tuesday, the 29th of January 2019. Apologies for yesterday. I was up in the Lake District for the weekend. I thought I was back on Sunday, but I was then informed by my wife it was Monday, and given the remoteness of the location, I was unable to get a message out. So everything's back to normal as of today. And starting off with the pound, let's just play catch up from Friday. The market moved higher on Friday there and then down yesterday, but we are through the all-important 200 bar moving average in the daily chart, and also above this for yesterday as well, which you can see here. There's the black line here, the 200 bar. That said, the market struggled from the open as Monday opened gapping down. We've got 76% retracement here. The market more or less double tops here, and again from here to here is also 76%. I'll just mark these up for you so you can see these as well. So from here down to here, you can see the market stops at the 76% area, and the same from here to here, bang on it there as well. You get used to seeing these after a while. I've marked up tens of thousands of these in charts looking for how this actually, how powerful it is and how it actually works. It is quite something else. But the pound just reacting to Brexit news, and I do believe that we have a vote on the amended backstop on the 14th of February. We'll just have to wait and see. But overnight prices have been range bound, narrow range, and currently the market's just driven through the 200 bar moving average and is holding there at the moment. It needs to break above the DP level in order to move higher. The only news today is consumer confidence. This is from the US. This is out at 3 p.m. Meanwhile, in the Dow, I've wound this back to the 28th because I wanted to show you that prices broke the 200 bar moving average there at 220 on the overnight. And again, you've got from here to here is a 76% retracement, I suspect. Let's have a look and just drag these across, and once again, yeah, you can see the market stops there. Great area to sell, and then through the two averages, one with selling as well, market breaks lower. Just remove this and drag the chart over up to the pre-market session, and then you can see at 12:50, an hour and a half before the market opened, prices just fell away sharply and then found support. We've got a double bottom here where the market's come across, gone up. We've got a 76% retracement there, and then down to retest. You can see them testing the selling over here, and then if I just remove the arrows there, from there to there, 62.76 there as well. Just double check that one. Yeah, 62 for that one, and then the market is free to move back to the upside there for the duration of the trading session. And in the daily, you can see the selling for yesterday. However, the market's come off the lows of this bar and managed to close higher, so I wouldn't be at all surprised to see prices move back to the upside. We did get a break to the upside as well on Friday, close to the 200 bar moving average, but certainly through the 76% retracement. This reversed yesterday and moved back to the downside there. And then finally in Bitcoin, this moving lower during yesterday's session, trading down to the 76%, which is 33.90, and we're currently below this by $4 or $3.50 at 33.85. So, which begs the question: are we going to retest the low down here of 31.21 in this market? But we're certainly a bit more of an increase in volatility, but nothing major. Still that defined sideways range for this market. And with that, that'll do it for this one. We're all back up to speed, so just a brief overview. Keep an eye on the pound. It's going to be news driven, Brexit news that is. And the Dow, well, let's see if it can manage to rally back a bit before we get some selling coming back into this market. But it's certainly not rosy globally. There is definitely a global slowdown taking effect. And what you've got to remember is that you have to have, I think it's 2 quarters of a downgrade in GDP for a recession. And of course, that's lagging. So again, keep an eye on these things. There's definitely a global slowdown in productivity and in house prices and so on and so forth as well. If you want to be kept up to speed with this, then have a look at the Zero Hedge website as the news is released. Okay, that will do it for this one. If there is anything, I will let you know. And as ever, thanks for watching. See you in the next one.